I'm not the only person who's glad 2020 is over. For investors, it was a year that included both gut-wrenching losses and one of the fastest recoveries in history. By the time the dust had settled on December 31st, index investors who stayed disciplined earned solid returns during a very difficult year. I'm Justin Bender, Portfolio Manager at PWL Capital. In this episode of the Canadian Portfolio Manager, we'll review the 2020 performance of the Vanguard and iShares Asset Allocation ETFs. I'm sure I don't need to remind you about what happened last spring, as the COVID-19 virus became a global pandemic. When the market touched bottom on March 23rd, Canadian, US, and international equities were all showing huge losses. From peak to trough, Canadian equities had declined 37%. US, international developed, and emerging markets fared slightly better, mostly due to the appreciation of foreign currencies relative to the Canadian dollar during this time. But all the equity ETFs that make up the Vanguard and iShares asset allocation funds were deep in the red. Usually during periods like this, investors look to bonds to provide a safety net. But even Canadian and global bond ETFs had a rough go in March, bottoming out with peak to trough losses of around 14% and 8% respectively. Then, almost as quickly as the markets fell, they roared back more swiftly than anyone anticipated. If you thought you could time the markets in 2020, chances are you found yourself eating humble pie. For example, the Vanguard Growth ETF portfolio, VGRO, peaked on February 12th before plunging to its low in late March, a decline of more than 25% in just 40 days. Then, it took just 196 days, including dividends, for the ETF to recoup all those gains. The lesson here is simple. All you had to do to be a successful investor during 2020 was to stay the course for the full 12 months. And one of the great benefits of asset allocation ETFs is they allow you to do just that, without requiring any rebalancing on your part. But before we look at the returns of the asset allocation ETFs, let's check out the year-end results for each of their underlying holdings, starting with the equity ETFs found in my model portfolios. Canadian equity ETFs lagged the US and international markets in 2020, but still finished in positive territory. The Vanguard FTSE Canada All Cap Index ETF, VCN, returned 4.8%, while the iShares Core S&P TSX Cap Composite Index ETF, XINC, returned 5.6%. It's worth noting that on June 22nd, Vanguard switched VCN's benchmark from the FTSE Canada All Cap Index to the FTSE Canada All Cap Domestic Index. Although VCN's new benchmark trailed its predecessor by around 0.3% in 2020, we still feel the domestic index better represents the broad Canadian equity market. US equity ETFs continued their dominance in 2020. The Vanguard US Total Market Index ETF, VUN, was up 18.2% on the year, while the iShares Core S&P Total US Stock Market ETF, ITOT, returned 18.1% in Canadian dollar terms and net of withholding tax. As VUN and ITOT track similar indexes, investors should expect to see similar performance between these two ETFs each year. International developed equity ETFs also ended the year on a positive note, with returns of 8.1% for the Vanguard FTSE Developed All Cap ex North America Index ETF, VIU, and 6.5% for the iShares Core MSCI EFI Index ETF, XEF. As we've talked about in previous videos, VIU tracks a FTSE index of developed countries that includes Korea, while XEF uses an MSCI index that excludes Korea, which it classifies as an emerging market. Korean companies returned over 43% in Canadian dollar terms in 2020, and this provided a boost to VIU's return for the year. Emerging markets equity ETFs received the silver medal in 2020, trailing only the US with returns of 12.4% for the Vanguard FTSE Emerging Markets All Cap Index ETF, VEE, and 15.5% in Canadian dollar terms for the iShares Core MSCI Emerging Markets ETF, IEMG. This time, IEMG had the return advantage over VEE due to the inclusion of the outperforming Korean companies. Putting it all together, if we combine these equity asset classes according to the target weights in the Vanguard and iShares Asset Allocation ETFs, we'd expect the iShares equity portfolio to have outperformed in 2020, with an estimated return of 11.9%, compared with 11.5% for Vanguard. Of course, there are other factors, such as additional management fees and rebalancing differences, but the returns of the underlying holdings help us better understand what's driving the returns of the asset allocation ETFs. A higher allocation to emerging markets equities, including Korea, provided some outperformance for Vanguard, but this was more than offset by iShares' overweight to US equities, which were the top performing asset class in 2020, and their underweight to Canadian equities, which were the worst. Now, your asset allocation ETF likely holds some bonds too, so let's check out the fixed income returns next. The weighted average yield to maturity of Canadian bond ETFs started the year at 2.3%, but had dropped to around 1.2% by year-end. Remember, a decline in yield increases the prices of the bonds, so the result was a surprising total return of 8.6% for both the Vanguard Canadian Aggregate Bond Index ETF, VAB, and the iShares Core Canadian Universe Bond Index ETF, XBB, the two largest fixed income holdings in the Vanguard and iShares portfolios. Canadian short-term corporate bonds, which make up 15% of the fixed income in the iShares portfolios, posted a surprisingly strong return of 6.2% in 2020. Currency hedged US bonds, like the Vanguard US Aggregate Bond Index ETF, VBU, returned 7.2%. And although the US bond ETFs held by the iShares portfolios do not have a Canadian currency hedged version we can use for comparison, we estimate the GOVT and USIG pair collectively returned between 8% and 9% in Canadian dollars during 2020. Lastly, the currency hedged Vanguard Global ex-US Aggregate Bond Index ETF, VBG, which invests in global bonds outside of the US, returned just 3.9% during 2020. So to estimate a ballpark return for the Vanguard and iShares fixed income portfolios, we can once again take the weighted average of each individual ETF's return. Doing so provides us with an estimate of 7.2% for the Vanguard portfolios and between 8.1% and 8.3% for the iShares portfolios. Alright, it's time to end the suspense and reveal the 2020 returns for each of the Vanguard and iShares asset allocation ETFs. Since our estimates gave iShares the edge in both the equity and fixed income portfolios, you won't be shocked to learn which fund family outperformed. Here's what each of the asset allocation ETFs delivered during the 2020 calendar year. Don't read too much into these short-term return differences. iShares may have gained the edge over Vanguard in 2020, but that tells us little about what to expect going forward. Over the long term, we would expect similar returns for comparable asset mixes. I'm Justin Bender of PWL Capital, and if you enjoyed this video, please subscribe to the Canadian Portfolio Manager YouTube channel. And if you'd like to check out the historical backtested performance of these asset allocation ETFs, check out my model ETF portfolios available on the Canadian Portfolio Manager blog, as well as those of my colleague Dan Bortolotti at Canadian Couch Potato.